I had these cool ideas and these deals that I thought were compelling. And I ran around and talked to everybody that I knew about them. And I kind of crammed it down their throat. I said, this is going to be great. It's going to be good for you, etc.
Welcome to the Real Estate Marathon Podcast, your guide in the race to financial freedom through real estate investing and sound financial practices. This podcast is for anyone interested in learning more about real estate investing, personal finances, and a new take on traditional retirement. Now, here are your hosts, Larry Fierro and Mike Moe.
What's going on, everybody? Welcome to the Real Estate Marathon Podcast, your guide on the race to financial freedom through real estate investing and sound financial practices. Mr. Fierro, what's up, man?
Dude, so much good stuff is going on at the Real Estate Marathon Podcast, bro. You know, and it's just been a wild year so far. What do you think?
Dude, for sure. It's definitely been a wild year. 2020 is one for the record books, man, in so many ways, but some of them bad, some of them good.
That's right. For the Real Estate Marathon Podcast, things are looking up. We're moving forward, getting some coursework put out, and
yeah, man,
a lot of good content. So how's everything going on in Minnesota today?
Minnesota, you even said that with a Minnesotan accent. I love it. Yeah, dude. I mean, you can't complain. I guess you can. I mean, it's dark at like 4:30 now in the afternoon because winter sucks in the northern states, but it is what it is. It's all right. We got the Christmas stuff up and we're ready to rock.
That's it. And hopefully this is coming out on Thanksgiving Day. So hopefully everybody's having a good turkey day today, and they've got lots to be thankful for, which I know we do here. That's kind of why I brought up our year being kind of wild and exciting.
Dude, plenty to be thankful for, man. This podcast and plenty outside of it as well, it's challenged us and made us grow in many ways that we didn't even think possible at the beginning of the year. So it's exciting and grateful nonetheless. That's fantastic.
I went back and listened to our first episode, and you want to talk about nervous. I was pretty nervous, and now I'm talking in front of thousands and thousands of people every month. And, it's just, it's a second habit now.
Yeah. Right. It's awesome. Yep. It's fantastic, man.
Well, who do we got this week today for the special Thanksgiving episode?
Yeah, Mr. Brian C. Adams. We talk a lot with Mr. Adams about getting started, about raising capital, about some mistakes that he's made and how to not make those. And then we dive into we're kind of all over the place, but we dive a little into like sales and how sales is so important to everything in not just in real estate, but in everything you do. You're selling something, you're selling an idea, you're selling yourself, sales are involved with everything. So we talk a little bit about that as well. So, but Mr. Brian C. Adams is the president and founder of Excelsior Capital. So he spearheads the investor relations and capital market arms of that firm. And he's been in the business for a little over 10 years now, and is really involved with real estate private equity and working with family offices. So really knowledgeable dude.
Absolutely. And I put a bug in his ear about coming back and doing a series for us on sales tactics and techniques. And I think we can actually get him here for more than one episode for something like that,
sure.
Or something along those lines. I'm pretty excited about it. Sales are a key part of everything that you do.
Dude, absolutely. That'd be great. Yep.
So I'm looking to do the warm up. What do you think? You want me to do that now so everybody runs safely?
For sure, man.
All right. Today I picked family offices as the main focus on what he was talking about early on in the episode. Family offices are private wealth management advisory firms that serve ultra high net worth individuals. They are different from traditional wealth management shops in that they offer a total outsourced solution to managing the financial and investment side of an affluent individual or family.
Yeah. At different levels of wealth, you need different strategies and different support teams behind you. And that's the goal, right? I think the goal is for everybody to, have that family office and to have that team behind you when you have that much from an investable asset standpoint. But yeah, we talk about it a little bit in today, so I'm glad we could define that for the folks.
That's when you start getting up towards the generational wealth that we're talking about.
100 million plus in investable assets. That's I'd call that generational. I think we can put that in a safe spot and have many generations to come be just fine.
That's it. So what do you think? You want to jump into this interview? I'm very excited to bring Brian Adams to everybody.
Let's do it. All right, Brian, welcome to the Real Estate Marathon Podcast, man. How you doing?
I'm good, guys. Thank you all for having me. I appreciate it.
We appreciate you coming down and sharing your knowledge with the listeners. We're very excited to have you here.
Yeah, like Larry said, we're super pumped to have you on and learn a little bit about some of the mistakes you made, scaling up your business. But before we get into that, can you give the listeners a little bit of an idea of kind of who you are, what you've done, and kind of what you're up to nowadays?
Yeah, absolutely. So we were just chatting before we went live. I'm from upstate New York originally, out in the country, kind of northeast of Albany, along the Vermont border. I went to college in Connecticut, and that's where I met my wife, who is from Nashville. So we met in school. We both went to grad school up in Boston. I went to law school there. Moved to Nashville about 15 years ago. And my wife's family has a family office, which is essentially a family of means that has enough capital where they invest on behalf of just the family. So it's kind of like an internal wealth management firm for just the family itself. And I didn't come from that background at all, but because of the family's exposure to some of the investments they made in the commercial real estate space, I kind of fell into that business by interacting with sponsors and general partners and some of the fund investments we had made. So I connected with my business partner, who's also a New York guy that married a Nashville girl, actually. We started the company 10 years ago. And, I could make this intro longer, but we essentially started raising funds like blind pool, commingled capital type vehicles. We pivoted towards a direct deal by deal syndication model roughly 5 years ago. And today we have probably $375 million of real estate kind of portfolio value. It's probably upwards of over 2 million square feet. We're in 12 markets in the Southeast and the Midwest. We're mostly commercial. We've done some different things over the years, and I've made a whole host of mistakes and continue to make mistakes, just hopefully less frequently, but would love to get into a little bit about the lessons learned, some of the scar tissue I have, and the hope would be that some people listening can avoid stepping into those potholes, by listening to some of the lessons that I've learned.
Well, selfishly, it's just Larry and I who really want to learn from you. But I guess our listeners can get some value out of it too, man. But on that point, let's dive deep into that. Like, how did you start, and what were some of those? Maybe some of those rude awakenings you had in that first foray into real estate.
Yeah, absolutely. So I just want to be super clear about this on the front end. The ability to raise capital was originally purely a function of the fact that I was a decent looking white guy that went to a good school who married into an affluent family. And I just want to be very transparent about that. I was given a leg up, and that allowed me into a lot of rooms and conversations that otherwise would be difficult to navigate. So I do have some lessons learned about capital raising, but a lot of it has to do with the privilege that I was afforded. That being said, the way that I got into the business was I wanted to stop practicing law. I wanted to do real estate. I saw a need in the marketplace where high net worth individuals and families, especially in the commercial side, the only exposure they had to direct opportunities or to commercial real estate was through a REIT vehicle or a fund of funds, or maybe a deal that their buddy brought to them. There was no one kind of serving that middle market space. And so I saw it as an underserved marketplace, went out and raised capital from friends and family. And I did this the wrong way, but what initially I did was I had these cool ideas and these deals that I thought were compelling. And I ran around and talked to everybody that I knew about them. And I kind of crammed it down their throat. I said, this is going to be great. It's going to be good for you, et cetera. And that worked to some extent, but it was very difficult to raise capital that way. I think one of the biggest lessons I've learned is to be realistic with your investor base. So if you list 100 people that you know that will take a meeting with you, take a phone call, and they might actually give you money. I mean, it's a hard thing to do, right? People are giving up their hard-earned money, their resources, and they're trusting you. That's a difficult thing to do when you don't have a track record and you're just starting out and you don't really have any infrastructure. So as opposed to finding a deal and then going to them, I think a much better way to do this in an efficient way is to go to those people and ask them what they want. So go to your logical investor base and say, hey, if you were to invest in a private placement commercial real estate opportunity, what were the things that you would want? Would it have cash flow? Would it have upside? Would it be an apartment building? Would it be a trailer park? Whatever the focus is. And then once you have a good sense of what those folks want and what it pains that you're addressing, what problems you're solving for them, find a product that fits that need and then come to them with that opportunity. And I think it will go a lot smoother for you. And it just may take a little bit more time. But if you have this shiny, beautiful object that you think is great, but if you can't raise capital around it, it's art. And art's wonderful. It has a place in our lives, but it's not a business, right? And so I think that's a big mistake that a lot of entrepreneurs, including myself, have made when they're just getting started.
Yeah, I think you bring up a good point. It takes a lot more time, but usually doing it the right way does, but it's better off in the long run, right? So,
yeah, and it's just commercial real estate, no matter what the asset class, it's such a capital intensive business. And when you're talking about high net worth individuals and families, even if they can write some pretty good sized checks, it's a lot of people. It's a lot of conversations. It's a lot of no's, even if your conversion rate is pretty good. And I just feel like you can put yourself in a position to be much more successful if you think through this a little bit before you just go running around and talking to everybody that's an accredited investor that you know.
And I think one of the keys that you had touched on is you have to not be afraid of the word no. I mean, because even as prepared as you can be, you're going to hear no occasionally. And if you're not dedicated and motivated and, just push through all the no's that you're going to get to the yeses, then, you're going to find yourself failing. But you should definitely get used to the word no and not let it bother you.
Yeah, I mean, I could talk about that for an hour. I think, if you're not the chief sales officer, you will fail. And if you're not getting a lot of no's, you're not making enough asks. And I'm not saying you need to be a jerk and be aggressive and pick up the phone and just dial for dollars necessarily, but you're not putting yourself out there. And if you're not getting no's, I don't think you're making enough asks. And frankly, I think a lot of people I'm 38. I think a lot of people who are in the 25 to 35 range, for some reason, they think a no has some kind of reflection on them as a person, or it implies that they're a failure or that they're not a good business person. I mean, that's just sales, right? I mean, it's just a conversion number. And it has, one of my mentors early on in my career said, if you get a no, they still, maybe with COVID, this is not a good analogy, but they still play football on Saturdays. Beer still tastes cold. Like the world goes on. And, as long as you're respectful and thoughtfully persistent, I don't think anyone begrudges you to make the ask and to call on them.
And that was one of the reasons. I mean, that's why I wanted to point it out, because I have noticed that, the 25 to 35, they do take it a little bit to heart that somebody tells them no. And I'm 49 and I'll be 50 and I'll be 50 in January. And no is pretty much a way of life when you're growing up, at that time. So it's just something that don't let it bother you and keep plugging away. And you're eventually going to hear some yeses.
And I think, I was talking to somebody, we're raising a deal right now, and there's somebody in the office, younger, it's his first raise with us. And we sent out an email campaign, obviously, and all these things. And he was frustrated by the response. And I said, listen, you've been with us for 6+ months. You saw a raise that we did earlier this summer. How many yeses did we get over email? And he said, a handful of legacy investors, that kind of thing. I said, exactly. You could pick up the phone, do a meeting. I mean, you're not going to get a bunch of yeses on LinkedIn and in an email. You got to make a call. That's just the business that we're in. And I think sometimes entrepreneurs and sponsors who get into this business, they don't want to necessarily do that part of it. But in my experience and opinion, if you outsource that to a third party, it's just not going to work. I just don't think it's effective.
And you can have the best product in the world, because I've done sales most of my life, and you can have the best product in the world, but if you can't sell yourself and they're not comfortable with you, they won't buy it.
Yeah.
Yeah, and I think it's a nod to making sure you have the right personalities in the partnership, right? Because you may have somebody who's really good at what they do, but they don't want to be in front of people. But then you got somebody who's not really good with the numbers, but they love talking to people. And if you guys can find that good match in a partnership, then you kind of got the win-win. So. Yeah, but somebody's got to do it, right? Nobody's going to give you $100,000 just responding to an email, right?
Yeah, or probably know that you want to do business with, frankly.
Right.
I mean, this is a trust business, and pre-COVID, my rule of thumb was that it would take 6 touches, right? So a touch every month was probably a good cadence. So you figure that's going to take 6 months to a year on a fast clip to bring in a new investor from a fresh contact. Interestingly, with COVID, I'd love to hear your guys' opinions on this or what you've heard, but I think with COVID, you're getting that process sped up a little bit, because people are more open to a call and they're paying more attention to the content you're creating because they have more time on their hands. And I tell people all the time, a quick no is just as good as a yes, because there's 12.4 million accredited investor households in America. There's a lot of calls to be made. And if it's not your cup of tea, that's fine. But tell me now versus 3 months from now, because I only have 12 hours a day where I can do stuff.
Well, I noticed with especially with our podcast and the thought leadership platform, our downloads have increased since the COVID hit, because people are just hungry for knowledge, and they're more willing to, like you said, jump on a Zoom call, because Zoom call is now the new standard instead of the in-person meeting. People are completely fine jumping on a Zoom call, and you can generally get a good feel just from talking to somebody for a few hours or an hour or 15, 20 minutes, if they're somebody you want to do business with or not.
Right. And I think that's also a really important part, is in terms of where I made a ton of mistakes early in my career, was I was so focused on getting that capital and closing that investor that I wasn't transparent enough with expectations. And now I'm very transparent in terms of, hey, Mr. Limited Partner, this is what you can expect from me. Monthly financials, a quarterly update, quarterly commentary, a monthly newsletter about our thoughts on the marketplace, et cetera, et cetera. And if you contact us, somebody, maybe not me, but somebody from the firm will contact you within 24 hours. We may not have the answer or what you're looking for, but we will get back to you within 24 hours. And weekends are my time also. And I think I was so scared about getting that capital that I just wasn't comfortable doing that. But it will save you a lot of brain damage and heartburn during that relationship if you're just very transparent on the front end about what the expectations are from you and from them.
And I've also found, just in my experience from sales, one of the dangers that certain people get into with sales is they spend all their time selling, and so much time selling, they forget to actually ask for the sale. And you have to learn how to close the deal. And like you said, you wanted to be transparent, let them know that you're above board. This is what they can expect. And that makes them a little bit more willing to invest with you. And when you get through the transparency, you actually have to ask for the money.
Yeah. And I tell young people this all the time. It's not a sales call if there's no ask.
Yeah.
I mean, if you just BS each other for 5-10 minutes and they like what you're saying, make the ask.
Yeah.
I mean, what's the worst that happen? They say no. Okay, that's fine.
That was one of the things I ran into training new salesmen. And I'm like, you talked to them on the phone for 10 minutes. Did you make a sale? Well, no. And I'm like, did you ask? Well, no. And I'm like, well, you actually have to ask.
Yeah. I mean, that's how the conversions work.
Yeah.
So Brian, let me ask you, you talked a little bit about infrastructure when you started. What are some of those things that you had to get in place that you realized you didn't have when you started?
Yeah, it's a great question. So I think another topic that I talk about with a lot of aspiring sponsors or people who want to be in this business is you've got two distinct sides of it, but that are equally important. You've got the actual real estate deals themselves, right? So that apartment building that is going to be a great deal, the commercial office building that's going to be a great deal, and those have to be solid, right? But then you're also starting up a small business. Right. So you've got dual risk from an investor standpoint. You've got to understand what you're doing on the real estate side, but they have to also believe that you know how to run a small business, because that's essentially what you're doing here. And for a long time, we were purely focused on the deal side. So we were deal guys, closing acquisitions, et cetera, raising capital. And, we had the bare bones, but we did not spend the necessary resources on the infrastructure that we should have, considering the scale of the company. So I tell people often, you're not going to like this. This is going to take time and money. It's not going to be revenue generating at first, but I promise you that you are much better off having a great investor relations platform, a great portal, tax, accounting, reporting, communications, all of that stuff in place before you buy your first deal, or at least a pathway to acquiring those things before your first deal, because you can take a lot of your risk and a lot of your time off the table early on, and you can focus on those deals, but you can't do them independently, in my opinion. And I think a lot of people just want to go out there. They want to buy that deal. They want to run the deal. But there's a whole host of things associated with being a commercial real estate sponsor that really have nothing to do with the real estate itself.
Yeah. And like you said, it's a lot of capital up front, but in the long run, it'll save you a lot of headaches, a lot of hassles, and it'll make you look like a more professional company if you take time and set those systems up.
Yeah. And Larry, I'm sure you know this from your experience. It's always more efficient to have a current investor re-up with you or bring in some of their friends, because if it's a warm intro from a current investor, your conversion rate is going to be much better. And the way that you can do that is just smothering those investors with love and attention and being institutional quality with the reporting, your tax returns, all of those things, which frankly, with a lot of prop tech these days, there's some really good solutions out there. But doing that versus going out and acquiring new investor leads, I mean, it's a matter of how much energy you want to spend on it, but it's well worth it in my opinion.
It is. And my first sales manager, who ended up being my mentor, he gave me the secret to sales is customer service. And one of the things he told me was a happy customer is going to tell 5 people that he's a happy customer or she's a happy customer. An unhappy customer is going to tell 200 people that they're a happy customer. Yeah. So if you think about every interaction with a customer like that, you really got to strive to make that a positive interaction, even though, it's 5 customers. You don't want them bad mouthing you to 200 customers. So, and like you said, it's much easier for repeat business than it is to get a new customer.
Yeah.
Which, and these investors really are basically your customers, because that's what you're there to do. You're there to make them money. So if you look at them like a customer and give them the customer service that you would somebody that's actually buying a product from you, it's just the same. So.
Yeah. And that's exactly how I think about the company. I mean, I'm a fiduciary and we are obviously our real estate operators, but I tell my team the way that you should function and think about when you wake up in the morning is that we are a sales and marketing financial services firm that just happens to have real estate as a product type. But everything around that customer service and that relationship building, that is the key. It's not necessarily the deals themselves, because those deals will change, right? But as long as you have that infrastructure in place, you're always able to go out there and use that platform to go raise capital and to acquire more properties. And I think leading with that versus the real estate will allow you to scale more efficiently.
Let me ask you a question on that. You hear a lot of times in the non-real estate industry that everybody should work in the service industry or in, the restaurant industry once in their life so they can understand what it's like to be on that side. Is that something that could be applied to real estate? Like, should we be a limited partner before we're a general partner so we understand what like good looks like from that relationship from the other end of that? I know I learned a lot the first time I was a limited partner, what I didn't like, around the communication, around, the things that were going on. But what's your stance on that?
Yeah, I think it's a great question. And what I always tell people is that, and I'd love to hear Larry's thoughts on it, the best salespeople I know are the most empathetic people I know. And they can easily, within a minute walking into a room, if they've done their homework, or even if it's a blind meeting, a 5-minute call or conversation, they automatically know what that person's pain points are, what they're going to be focused on, and how to maybe address those issues. And it doesn't even have to do with your product, but really good salespeople can say, oh, you've got this problem. I'm going to introduce you to this guy because I think he can help you. And you just build that karma up over time. And I think that empathy comes from oftentimes being a service industry experience. I know I worked retail for a while when I was in college, and I worked at a super high-end gourmet cheese store in a very affluent suburb of Boston. And, these people were super high net worth individuals. And I just was a kid. And it was always around the holidays. I would do it to raise money or to make some money before I went on a ski trip every year. And these are like the CEOs of major companies and their wives. And these people would treat you like garbage. And it was just awful. And you realize very quickly that, and I think this will help you be a good salesperson, they don't really care about you. They care about how you can solve their problems. And I think one of the big problems I see with people who pitch is they start with their resume. They come out, they say, I went to Harvard, and then I went to business school, and then I worked at this private equity firm. And the person across the table probably just doesn't care. It's just white noise until you get to the part where what you can do for them to solve their problems, because, that's what they're there for. But unfortunately, sometimes average attention span is like 12 minutes. By the time you get to solving their problems, the pitch is dead. And I think that's a big problem that I see in the industry today.
And one of the things I found is also the best salesmen out there, they are empathetic and they are looking to solve your problem, but they also put your needs above making money. And that is one of the keys. One of my favorite holiday movies is Miracle on 34th Street. And, I'm going to get a little nostalgic, but I watched that when I was a kid. And it always stuck with me that the department store Santa was selling or sending people to other stores to buy it cheaper. And that made lifelong customers for the store he was working for because he was putting the people above profits. And that right there is the key to the best salesman in the world. You have to walk in and you have to find out what they need and be truly concerned about their needs rather than your own bottom line. And we've all met that one, those salespeople that you're looking for a new vehicle, you've got a wife and 5 kids or whatever, and they're trying to sell you a sports car. And, you're there to look at minivans and they're just trying to upsell you. And, nobody wants that. So They can generally tell whether, and the word I like to use is smarmy, but they can generally tell whether you're smarmy right out of the gate. As soon as you stop listening to the customer, stop caring about the customer's needs and only putting the sale on your resume, then you've lost the sale right there.
Yeah, I completely agree.
Brian, kind of on this, the other question around should people become a limited partner? Should people do deals on their own before they start raising capital? So in order to get that infrastructure in place and get those kind of necessary systems and processes in place, is that required, or how do you see people jumping into this game? Is it, right off the bat, was it raising capital or doing a deal on their own?
Yeah, I mean, you often see that fact pattern where people will do the single family home investment and then they'll move to a quadplex and then they'll move to a small multifamily deal. And I don't think there's anything wrong with that, but I do think, and this is where maybe starting out, to your point, Mike, about having complementary skill sets, I think is hugely important because you can probably speed up that process by bringing on a partner or a joint venture partner, where if you're really good at sales, but this person is more of a CFO type and they've got background in multi or industrial or whatever, you can combine yourselves and build up a little bit of track record and background there. And it might be helpful. I don't necessarily think that if you surround yourself with the right people that you need to go and do deals yourselves. I think there's a real challenge because it is so capital intensive that it's just impossible barrier to entry for some people. And I empathize with that because it is difficult, to go and buy a $5 million property if you don't have a bunch of folks that can stroke $100,000, $250,000 checks. So I do think that you need some kind of proprietary advantage yourselves. But this is where having a partnership with one or two other people that can kind of meet the needs that you don't have makes a lot of sense, I think, to start the business.
Awesome.
One of the things I'm kind of curious about, when we talk to some of the listeners, I've talked to some listeners, and they say that one of the problems they have is actually making those connections right out of the gate, the networking. They have a difficult time networking. They're shy. They're not outgoing. And in your opinion on somebody that's having a difficult time networking, do you think that going out and forcing themselves to do a sales position or cold calling, or what would you say would be one of your keys to learning the networking aspects of it?
Yeah, unfortunately, it's just the nature of the business. And, I've got 15 employees. We've cycled through a couple over the last handful of years. And I don't want to dissuade anyone from getting into the business, but at the same time, in my experience, you can't teach that hustle. Mm-hmm. And you can't teach that grind, and you can't teach that networking. It's something that I think is inherent in people. And oftentimes when I'm looking to hire somebody will make an introduction. I will purposely go dark on them. I'll see if they follow up. I'll maybe respond to an email and say, hey, I'm busy. Call me back in 2 weeks. And if they don't play that game, they're not going to be a fit for me and my organization, because if you're not thoughtfully persistent, if you don't pick up the phone or text me or figure out a way to get in front of me, I just don't think commercial real estate is going to be a good place for you, because it is inherently a business where brokers and investors and everybody associated with, we're all running around a million miles an hour, and you've got to be a little bit creative and thoughtfully persistent in order to get the sale, in order to get the investor. And I think it's very hard to learn that. I think you're just kind of born with it.
Yep. Well, and like you said, it's the persistence is key, because all the money is made in a follow-up. And like you had said, your average investor, it's 6 touches or more. And if you get frustrated after 1 or 2 no's, or 1 or 2, like you said, you ghosted them. And if they're not prepared to go after that sale and try and help you figure out what your problem is, then maybe they aren't a good fit.
Yeah.
And that's one of the things, to a certain extent, you do have it or you don't have it. And I know a lot of people, I've talked to a few people, and when I would train salespeople, they would start out and they were kind of introverted a little bit. And then we would push them to do cold calls. We'd get them on the phone. We'd get them in front of people. We'd get them talking. And then like a switch got flipped, and like they were outgoing all along. They just didn't find their skill level. And I've had some of the best salesmen that I've trained walked in and wouldn't look you in the eye. They'd be looking down at the floor. They'd shake your hand, but it would be kind of tentative. And then you put them on a phone, or you'd send them out on a cold call, and they'd come back with some pretty impressive sales. And they found a key. So I think, like you said, you either have it or you don't. It's the people that have it and don't know they have it that I'm concerned with. And you generally can find that out if you try a sales job, and usually the first 2 weeks, like you said, you've had some people that jumped in and it didn't end up working. But persistence is also key. So make sure that you're following up with everybody.
Yeah, I mean, that's why I love hiring leasing brokers, like young leasing brokers who have been in the business 2 or 3 years, frankly, they still have this in Nashville. They're still door-to-door book salesmen here. And I mean, those people, if you can get them, are just incredible, because they've never met somebody they didn't love, and they didn't love them. They've literally been walking the streets, banging on doors for 12 hours a day, probably getting 100+ no's a day. And they wake up the next morning, they do it again. Yeah. And I think, that skill set is just invaluable in this business. And we got one starting on Monday, young leasing broker, literally given just, a book of names by his old boss, said, figure it out. Here's your territory. I love that, you know?
Yep. And you build a customer base from that. That's fun. I've had situations where they've handed me that kind of thing, and you just tear it up, and that's fantastic.
Fun.
So
that's not fun, Larry. But you build some thick skin, that's for sure.
Well, you build thick skin, and then you have to look at it like, a lot of times the people that you meet out there are just so interesting and so much fun. You never know who's on the other side of that door. And in a job like that, every day, every morning is like opening a birthday gift.
Yeah, and that's the mindset. I think it's not, don't give me a smart guy. Give me a curious person, like who's genuinely interested in what other people are doing, because I think that leads to better sales. 100%.
Yeah.
It's awesome.
So, wow.
All right, man. I got one more for you. If we talked a lot about your story and about getting into the game. If there's one thing or one skill that somebody could kind of sharpen over the next couple months, or one thing that they can do, what is that if they want to kind of follow in similar footsteps that you did, get into the real estate game, starting to get into larger deals, finding those partnerships that kind of produce these results that you've gotten? What's that one thing that they can kind of take action on and get out and do right now?
Yeah, and this is going to be an unsatisfying answer, but I think it's the truth.
I like it. The truth hurts, but sometimes it's necessary. So
in the real estate business, you all know this as well. There are 2 skill sets that every company will always pay up for, and that you will always have a job. If you can find deals or raise capital, you will always have a job in this industry. Everything else can be outsourced, third-partied, or I can price check you on it. Asset management, property management, accounting, leasing. Somebody is willing to do it cheaper, and I can always find somebody to take your spot. And I can rotate that through, and it might be a little painful for me, but it's not a big deal. But if you find somebody internally that's really good at raising capital, or just has a nose for good deals, you will always pay a premium for that person.
It's awesome.
Yeah, those two of the key motivators and drivers of the real estate industry. So,
yeah, man,
excellent answer.
I tell my team when they wake up in the morning, they should think about how can I raise capital and how can I find deals. Everything else we can figure out. But those are the ways that we grow the business and scale the business.
Excellent advice. This has been a phenomenal episode. I can't even thank you enough, Brian, for coming down and sharing this.
You need more upstate guys on the show, man.
Oh, I've been looking.
518 would represent.
Well, that's what I'll have to do. But the only problem with all the 518 guys is they live in Nashville now. It's cold up here.
Everybody got out of there.
Yeah.
Brian, could you tell the listeners how they would reach out and get a hold of you and find out some more information about your business?
Yeah, I appreciate that. So the website is excelsiorgp.com. You can log on there. We do a newsletter. You can sign up for that. And then I'm super active on LinkedIn. So if you just Brian C. Adams, Excelsior, hit me up with a message request or a connection request, and I'll find a time to talk to you and we can talk about anything you want. I'll try to be as helpful as I can, making intros, or you might get your money's worth out of my free advice, but I'll give it to you. So please reach out. I'd love to help any way that I can.
Excellent. Thank you.
Awesome. Cool. Yeah. Like Larry said, really appreciative of you coming down here and giving the listeners a little information and a little education on how you guys started and something that they can use in their own journey. So appreciate it, Brian.
Yeah. Thank you guys. It's great.
All right, Larry, that was Mr. Brian C. Adams talking about a lot, man, talking about getting started, raising capital, and a whole lot of sales conversations. Right?
Oh yeah. And one of my favorite subjects, Brian and I hit it off great because, him and I are both done sales a majority of our lives. And, sales are a big part of it. You have to know how to sell yourself. You have to know how to sell your product. You have to know how to care about the customers. And like we talked about, the number one skill as a salesman is the ability to listen to what the customer needs and solve problems.
Yeah, for sure, man. And you might have people listening and like, well, sales, like I'm not trying to sell cars here. I'm trying to get into real estate, but I think you're underselling the importance of how important just selling, the act of selling is, because like we said at the beginning of this, you're always selling something. You're selling your vision, you're selling yourself, your skill sets, and whether that be to investors or partners or future joint ventures or future business partners, whatever, you're selling yourself or selling something in almost every interaction you do. So it's very important. So
absolutely. You got to get out there. You got to learn how to sell. And I think that it would be beneficial for everyone out there who wants to be successful in anything to learn how to do sales at some point or another. You have to do the sales to make the money.
Understand the process. Yeah, for sure.
Exactly. So,
cool. Sounds good, man. Let's chat about our call to action. Mr. Brian C. Adams gave the folks a couple call to actions, right? So we talked about, if you're sitting here thinking about, how can you get started in real estate? What can you do? Brian talked about two key skill sets that will always fetch a premium for real estate, no matter what cycle, no matter what market, they'll always fetch a premium. And that is raising capital and finding deals. If you can figure out what your personality, your skill sets, what they, lend themselves better out of those two, and you can get really good at one of those two, you're going to get paid off. Your skills are going to get by, and you're going to get part of these deals, and you're going to find yourself a good home in real estate if you can figure out one of those two. So,
and just make sure that when you go into real estate, that's one, like you said, that's two areas that you really should concentrate on learning first. And then the other ones you could always outsource.
Yeah, for sure. And I mean, the guy's right. You think about it, there's tons of people out there who've got, deals, but no money. And then there's people who got bunch of money, but no time to go find deals. And just got to be the matchmaker, be the Cupid of real estate and partner people with money and deals. And you'll be in a good spot.
Absolutely. Well, that's everything I've got for the folks on this fine Thanksgiving day. Hopefully they're not too hopped up on the tryptophan from the turkey and sleeping through most of our podcasts. Hopefully they were able to make it through.
Yeah, hopefully, you listen to this while you're going for your post-dinner walk or something like that, or maybe you just want to sit down and watch some football and relax. Either way, we support you if you want to listen to this after Thanksgiving. To your point, Larry, we hope you have a good one. Like we said, we talked about it a little bit in the beginning. Such a good time to take a little bit of time and think about how grateful we are of the things that we got. And man, it's been a good year here at the Real Estate Marathon Podcast, and we hope you guys have had a fantastic year as well. So
be very thankful and enjoy your day.
Yeah, awesome. So cool. Thank you guys for tuning into another episode of the Real Estate Marathon Podcast. We'll see you next time.
Take care.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group or follow us on Instagram and Twitter at Real Estate Marathon Podcast.